Australia has come through its recession after the pandemic in better shape than most other nations on earth. But it's cost us. New research from the International Monetary Fund shows our government debt grew at a faster pace than any other country in the past 3 years. Our business editor Ross Greenwood joins us now. And Ross, how much extra debt have we taken on?
Well, a truckload, you'd have to say, Laura. There is no doubt about that. In actual fact, if you do the numbers, crunch the numbers through the IMF stats, you come up with a number of around $590 billion. Already the federal government's spending, and much of it on JobKeeper, job seeker programs. You can actually come up to around $330 billion in federal government spending. But quite clearly, this includes state debts as well. And that's where the number comes up. So before we went into this pandemic, our total government debt sat at around about 47.5% of our GDP. That now is suggested to have risen to 77%. And that's the reason why it's the fastest growing. And so from this point of view, Australia is certainly in great shape. You can see it even our stock market getting back to those pre-pandemic levels now. The fact that real estate is as strong as it is, the company profits are improving, jobs are picking up. These are all good things, but that's largely because of the significant amounts of government borrowed money that's in the system, and also, of course, record low interest rates here in Australia as well.
All right, we've got a lot of debt, Ross, indeed, as you just spelled it out there for us. But debt is cheap at the moment, so could this actually be a bit of an instrument for us?
Well, the answer is yes, of course it is. It is the way in which we've been able to sort of, if you like, overcome the negative impacts of a recession last year to make certain that people are in work. The question is what happens when it turns around? Future generations clearly have to repay that. One way you can actually reduce the impact of that debt is to have inflation rise, and the inflation eats away at the debt. And also, if you even compare us still today with other nations around the world, the other OECD nations, the average debt in those nations is said to be 99% this year. Now, consider ours, 77%. We look quite good. But, of course, this is not about trying to compare yourself being better than others. It's trying to make certain you can manage your debt, not just today, but into the future, if interest rates do rise and if the economy does slow into the future as well.
Well, elsewhere, the banks that's filed for the Whyalla Steelworks that's going to be put into liquidation also has big troubles of its own. Talk us through that.
OK, so the bank that really has got problems here, remember it works from Sanjeev Gupta, who financed these steel mills here and in the UK by effectively an invoice factoring firm called Greensill. It was, again, an Australian-based organisation. It's gone broke. As a result, then, its creditors are chasing Greensill right now. The major of those is Credit Suisse. Credit Suisse then starts to chase assets here in Australia, including the Whyalla Steelworks, and suggesting it'll put it into liquidation to get as much money back for its investors as it can possibly get back. But in the meantime, it's got another scandal, another drama. It's got an investment business called Archegos that's also hit the wall in the United States, and now suggestions that it might be looking for its own investors. So not only has it got the problem of Greensill and obviously the debts of Sanjeev Gupta it's trying to recover, claw back. Gupta, in the meantime, says he feels as confident still that he will get the financing, the refinancing, to maintain his business in the UK and here in Australia, but it really does show that one of the biggest investment banks in the world is significantly impacted as a result of that collapse.
Just one final one before I let you go, Ross. Some really good news today. We've seen the effects of China's import bans on Australian goods, but there's some evidence today that cotton, coal, timber, everything but wine really has been able to find other markets. Should we be as confident as we seem about that?
Oh, so this is actually really good, showing that the Australian exporters are flexible. And if China doesn't want our goods, or indeed they're going to put taxes like, I think it's 170% on Australian wine, then Australian exporters are going to try and find other markets. And indeed, when you go to those areas you mentioned, the barley, the cotton, the sugar, are all areas where big tariffs are being put on by China, and they're finding other markets. Japan, Korea, Indonesia, Malaysia, areas in our region that want want our goods and services. And so the interesting part about this is it hasn't had a big impact on our economy yet, those clampdowns by China, mainly because the iron ore price, which they desperately need and can't get from anywhere else, they haven't put any tariffs on that, and the price has gone through the roof as they're trying to rebuild their own economy. So Australia right now economically is not feeling any impact from those trade bans in China.